All right, let's dive in. Today, we're going to pull back the curtain on a subject you probably think is, well, pretty boring. But we're going to show it for what it really is, a work of hidden genius, a kind of ancient technology that's quietly running our entire modern world.
Our story starts with this number right here, 7,000 years. Just let that sink in for a second. That's how long the information system we're talking about has been in continuous use. It's been refined and perfected over millennia. We're talking older than the pyramids, older than written law.
I mean, think about that. We live in a world where your phone is obsolete in a couple of years, right? But this system has held on for 7,000 years. It's, without a doubt, one of the most stable and resilient information systems humanity has ever created.
So, what is this incredible thing? It's not some lost language or an ancient computer. It's accounting. Now, I know what you might be thinking. Accounting, dull, right? Spreadsheets, taxes. But stick with me here, because we're about to look at it in a completely new way. Not as bean counting, but as a masterclass in information design.
So let's start with this first big idea. Accounting isn't really about numbers. At its core, it's an information system, and it was specifically engineered for two things: to generate truth and to create stability. Its whole purpose is to build trust right into its very structure.
And that trust gets built on three fundamental pillars. First, transparency, so anyone can see what's going on. Second, traceability, so you can follow every single transaction from start to finish. And third, internal quality control. This is kind of the system's secret weapon for making sure everything is accurate. This brings us to its most powerful and maybe most misunderstood feature, its ability to act like a zero-error engine. And this isn't just a goal, like something to strive for. No, it's a core part of its design.
You know, in most systems, errors are just bugs you have to find and fix later. But in accounting, the system is designed from the ground up to prevent those errors from ever happening in the first place. Perfection isn't a happy accident, it's a structural property. So, how on earth does it do that? Well, it does it through a truly brilliant invention, double-entry bookkeeping. The idea is that for every action, there's an equal and opposite entry somewhere else. It's kind of like a self-checking computer program where every line of code automatically validates another. If things don't balance perfectly, the system instantly throws up a red flag saying, hey, something is wrong here.
But here's where it gets even more sophisticated. The system doesn't just tell you that something's wrong. It actually helps you figure out what kind of error you're looking at.
And this is a huge deal. The system's internal checks help us distinguish between a simple mistake, an accidental slip of the keyboard, and actual fraud, which is an intentional, deliberate attempt to manipulate the numbers. This ability to separate an honest error from deception is absolutely crucial for building real, lasting trust.
Okay, so we've established we have this incredibly rigid, zero-tolerance system. You'd think that would make it fragile, right? Inflexible. But here's the wild paradox. It's also unbelievably adaptable.
Which, of course, leads to the big question. How can a system built on these unbending mathematical rules also be flexible enough to describe literally any business in the world, from your local coffee shop all the way up to a company that launches rockets into space?
The genius is in the design. It allows for flexibility, but only inside a strictly controlled framework. So you have what's called the chart of accounts. Think of it like a customizable toolkit. A business can create any category it needs, whether it's rocket fuel or coffee beans, to model its unique reality. But, and this is the key, everything, and I mean everything, has to be anchored by one simple non-negotiable rule, the invariant accounting equation.
You've probably seen this core rule expressed like this. What a company owns, its assets, equals what it owes to others, plus what the owners themselves have put in. This is one way of looking at the truth.
But you can also rearrange it to say this: what a company owns minus what it owes equals its net worth. See? The form can change, but the underlying mathematical substance, the truth, is exactly the same. That equation is the system's unshakable center of gravity. So, all of this, the rigidity, the self-checking, the controlled flexibility, it all comes together to produce the system's ultimate payoff. And that payoff is a concept called determinism. This is really where its power comes from.
So what is a deterministic system? Well, it just means that the system is totally predictable and reliable. If you feed it the same set of transactions, you will get the exact same financial statements out the other end, every single time. There's no room for ambiguity.
The process is really straightforward. You start with consistent inputs, all the economic events that happened. You run them through the unbending logic of the accounting system, and you are guaranteed to get identical, predictable outputs.
And why does that matter so much? Well, because a deterministic system is, by its very nature, reproducible. That means anyone can come along, rerun the calculations, and get the exact same result. That makes it auditable. You can check the work, and it's all mathematically coherent. This is the very bedrock of financial trust.
So here's the main takeaway. Accounting isn't just math or a bunch of rules. It's a brilliantly engineered information system designed to produce one of the most valuable things in our society, trust. It's the invisible architecture that lets you invest in a company halfway across the world. It's what allows global trade to even function at all.
Which really leaves us with one final thought. After 7,000 years of constant refinement, this silent, powerful engine is still running in the background of all of our lives. So is it possible that accounting is the single most important invention you've never really stopped to think about?